Have stocks come down enough from their highs that it makes sense for a new wave of money to come in from the sidelines? I think the answer to this one is no. Because while the Nasdaq's well off its highs, down 8% at the low yesterday, the Dow's barely down at all. You need all the major averages to be hurting before you get an investable bottom. 9, is there anything that could possibly fix the proximate cause of the decline? This time it's clear. The cause is the Fed declaring war on inflation. If we start to get some softer inflation numbers since Omicron strain has run its course and more people come back to work, that could certainly help. We're not there yet. The good news is that at this point, Omicron should peak, I think, by the end of the month. Once that happens, you need to get more positive because that's going to help the fight against inflation. We'll delve into that later in the show. So here, let's give that a question mark, all right? Then finally, forget the Fed for a moment. Is the rest of the government a hindrance or a help? For better or worse, the government seems paralyzed. I say there are more worse things than gridlock. So that one I'm going to say is fine. All right. So when you add up all these, I think we could soon get maybe we get some more short-term trades like we had today. But there's just not enough check marks at all for me to feel like that this was anything serious today. Too few checks. That doesn't mean you can't pick selectively in stocks on the way down. We're going to start doing that for the charitable trust if we see any buys. We haven't yet. It's too early to be aggressive. The bottom line, based on my checklist, it's just too soon to talk about what's worth buying into weakness. I think we need to experience more pain before we get the big bottom that we're all waiting for.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.